Hello everyone, welcome to Jorden&Sky Learning Lab, and today we are going to discuss about capital gains. So what is capital gains? Capital gain is any profit or loss that arises from sale of an capital assets. It's called as capital gain. Capital gain has been divided into short-term capital gain as well as long-term capital gains. This is very important. Okay, how do we define a short-term capital gains and long-term capital gains? So short-term capital gains are assets which are held for less than 36 months, that is 36 months, and long-term capital gains are the asset which is held for more than 36 months. However, in case of equity or preference shares, debentures, government securities, unit of UTI, zero coupon bonds, if the assets are being held for less than 36 months, they would be treated as in short-term long-term capital gains. So basically, in this category, if it's held for 12 months or more, then it would be considered as a long-term capital gains. So now there are few important aspects which we need to understand before understanding how to calculate long-term capital gains and short-term capital gains. First is full value of consideration. What is full value of consideration? This is your sale value. It is the amount received or to be received by the seller in respect of sale of an capital assets. Even though you have received in this year or partly in the next year, you will have to consider the entire sale value while calculating the capital gains. Cost of acquisition. This is the price which you have paid to acquire the capital assets. It's called as a cost of acquisition. Cost of improvement. Any expenditure which you have incurred in alteration, which is again has to be capital in nature. It cannot be revenue in nature. Suppose you have a bungalow wherein you have added up one more room to that bungalow. That expenses are called the cost of improvement because it's capital in nature. Then there is an indexation. So as you purchase, suppose you purchased a flat in 2004 and you're selling it 2019. Okay, so there is an inflation which needs to be factored into consideration. That's where cost inflation index, which has been maintained by income tax department, we can use that to calculate the inflation. That's called as an indexation. So now let's understand what are the various long-term capital gain and short-term capital gain tax rates. Okay, suppose you've sold an equity oriented, so in case of itself, not an equity oriented funds, you will have to pay tax at 20%. Whereas in the case of an equity oriented funds or shares, over 10%, you will have to over 10% on and above 1 lakh rupee. In case of a short-term capital gains, whereas security transaction taxes are not paid, it will be applicable as per your tax slabs. And in case of security transaction tax has been paid, then it would be taxed at the rate of 15%. Now in case of a mutual funds, so in mutual funds, you invest either in debt or equity, or it's a combination of debt equity. So how do we understand whether it's an equity oriented fund or it's a debt oriented fund? So if the equity investment in that mutual fund is more than 65%, it would be considered as an equity fund. And in case of an equity fund, short-term capital gains are taxed at 15%. Whereas in a debt fund, it would be taxed as per your income tax slabs. And 20% with indexation in long term. In equity fund, long-term capital gains are not taxable. Now, how to calculate a short-term capital gains? Okay, this is the simple formula in terms of calculating short-term capital gains. So you'll have to start with the sale value. You'll have to deduct your expenditure which are incurred wholly and solely in connection with such sale, maybe commission to the commission charges, brokerage charges, stamp duties, and all that. Then would be cost of acquisition and cost of improvement. If you have, what would be your actual cost of purchase, and if you have done any improvement, you will have to deduct the same as well. And the balancing amount would be short-term capital gain, and it would be taxed as per short-term capital rates. Now, how do you calculate a long-term capital gains? So you'll have to start with the full sale value of consideration, that is the sale value. You'll have to deduct expenditure, again connection with the transfer. Then here it's an index cost of acquisition and index cost of improvement. In short-term capital gains, you don't have an option of index. That's an inflation adjustment. We will see how this works in an case study. Okay, Then we'll deduct certain exemptions under section 54, 54EC, 54F and 54B. So these exemptions are given by the government to promote more investment. So suppose you have sold any house, government wants the assessee to invest in another house, so they can claim an additional exemption into the same. And the balancing amount is called long-term capital gain, and it would be taxed according to long-term capital rates. Let's take a case study over here. Mr. Jordan purchased house for 50 lakhs in July 2004. These rates are important. Okay. The full value of consideration in the financial year of 18-19 stood at 1.8 crore. Now, first, how do we identify whether it's a short-term capital gains or long-term capital gains? Is you have to see if it's held for more than 36 months, it would be considered as a long-term capital gains. So clearly in this case, the asset has been held for more than 36 months. So this is a long-term capital gain, and we will take an help of indexation as well. So sale consideration is 1.8 crore. There is no cost of improvement, and assuming there is no sale charges as well. Sale consideration 1.8 crores. Now indexation. So 50 lakhs is a purchase price. I've sold in FY 18-19. So as per CII, that is cost inflation index, FY 18-19 CII was 280, whereas my purchase was in FY 45. So FY 45 CII was 113. So my cost of acquisition from 50 lakhs, it came to 1.23 crores adjusted with the inflation. And the balancing amount is my net capital gains, which is taxed at 20%. I hope you understood about capital gains, and I hope you like this video. Do share it with your friends and let us know in the comment box below if you have any questions about capital gains, short-term capital gains or a long-term capital gains. Share this video with your friends, and thank you very much. Keep learning.